What does it really take to turn real estate into a multi-million dollar business? Well, I'm documenting the whole process for you on the daily with wins and losses and everything in between. Most people overcomplicate real estate. I'm going to show you that day by day how to actually build a seven-figure business from the ground up. No hype, just the real numbers, deals I'm actually doing, and lessons that I'm learning along the way. And so let's begin by answering some questions in our Skool community. All right, we're over here in Skool, and we'll kick off with this question from Raymond. Does it cost money to make an offer? So he said he found this question and answer on a website of a broker's listing. And it says, how do I make an offer on this property? And they say all offers must be presented in writing with an escrow deposit of 10% or $5,000, whichever is higher. Escrow has to be sent to the attorney or title company who is handling the file for this property. Please send us an inquiry and one of our team members will get in touch with you, yada, yada. And so his question is this really required? And I would say overall, this is fairly uncommon, but this may be kind of like a formal process, or this might be a situation where they're bidding at an auction. This sounds like to me more of an auction process where you have to actually put in some money in order to submit your offer. But I have also worked with some brokers and attorneys who require this. The seller just says, this is how I will do it. And they will not accept any other offers any other way. And so what this does is it creates a bit of a barrier to entry. And this is how they attempt to keep people from just kind of wasting their time and not actually having any cash and making offers, which kind of makes sense. And in a seller's market, this probably works pretty well. Or if you have a really highly desirable property with a perhaps really high, like, $50 million or more, this kind of stuff is probably more common. I would say that on average, this is not a common requirement, and that you don't have to put in $5,000 just to submit an offer. Typically, you make an offer, and then once they accept your offer after you've negotiated, then you're required to put in your earnest money deposit. And Peter points out that this is often negotiable. Like they can say this is the rule, but you can say, bro, I'm not doing that. Like, no. Like if you want an offer from me, I'll submit you an offer. And if you like the offer, then I'll send you the $5,000. Okay, here's a deal that Latate has posted in our deal room. And so what he's done is he's gotten a property under contract and he's offering to assign his interest in this 64-unit apartment complex in New Orleans. He's saying that his assignment is negotiable. He's already negotiating with himself. I don't like that. And he's put in some information, CapEx, and then he just goes on and puts in a bunch of information. And so I love that he did all this research to find out about this property, and that this is kind of due diligence that he's done for trying to find a buyer or a capital partner. This is a little bit too much, because what's going to happen is you're going to post this, people are going to read through it and say, this is not for me, and they won't reach out to you. And so when you're trying to build your capital partners list, you want to get on the phone with people and talk to them and develop a relationship and figure out what their buy box is. This is keeping you from getting on the phone with people and allowing you to understand what their situation is. And so I think this is a little bit too verbose for basically a flyer. If you had an existing list of like 5, 10, 20 solid buyers that come in and buy your deals, or capital partners that want to come in with you and be a part of the deal with you, then I would divulge more upfront. But when you're just reaching out into a public forum like this, I would be cautious about providing this much information. Even though he has under contract, he's not doing anything wrong from my view. It's just not as effective as it could be. I would like to shop the deal with engage interest and get on the phone with people and have a conversation. So Harvey here has a question about our analyzer. And so I'm going to open that up for you and let you know what he's talking about. So this is our owner financing payment calculator. I'll make it a little bit smaller so it's not quite as much of an eye chart so you can kind of see it. And so what we're doing here, I'll do full screen. Maybe you can see it better. And so what we're doing is these fields that are in yellow are variables. And then so when you change this to 1200, it changes some of the numbers down through here. It does the calculations for you. And it does some analysis of basically what the cash on cash return would be, et cetera. And so the question is we've added a closing cost percentage in here, and we're targeting a cash on cash return of at least 15% or higher. And in this case, what he's saying is this 2% included in the calculation? And yes, it is. And so we want a the amount of cash that the seller has to bring into it to be lower than 25%. And so that does include your closing costs, because a buyer has to come in with, in this case, a down payment of 1.35 plus repair costs plus closing costs to equal a total cash on cash return, or total cash required, of about 1.5 to close. And so this is the number that any investor is going to be looking for. And we want this number to be as low as we can possibly get it when we're trying to raise capital, because it's less capital I have to raise. Okay, here's another question that Charles asks, and it's about the expense ratio. And he says, what is the expense ratio that you want to use for an RV park? And do you expense ratio and a 35% expense ratio for mobile home parks. Storage, you can probably get away with 30. And triple net lease, you have to use actual expenses. There is no rule of thumb that we've ever come up with that makes sense for triple net lease, because there's so much variables in here. But typically when you're operating within the 15 to 50 range, which is very common for us, the 45 expense ratio is very common. For a 2 to 812 unit, I tend to think that the 40% works better. It's possible. You're going to have to look at actuals to see if what their expenses are running for. So again, these are just rules of thumb. We actually would prefer to have actual data to run it by, but when you don't have that, then we use some quick assumptions just to see if we're in the same ballpark or not. So this really isn't a question, but this is a comment from Ivan. He's saying that brokers are starting to come back around from 2 months ago. And this is exactly right. And I say this all the time, the fortunes in the follow-up. I would say at least half, and probably more like 75% of the deals we do are from our follow-up and not the first time we reach out to somebody and negotiate a deal. We negotiate, we can't come to terms. We're like, okay, I don't see how I can make this work. I'll check back with you in a few weeks, months down the road. And when we come back, sometimes they're ready to go. Sometimes they come back to us because we've given them a written letter of intent. And that's why we like to submit written offers. And they have that on file and they come back and say, is this still good? I say, well, probably not, but let me reevaluate. Let me see if I can make an offer that makes sense. Okay, here's a great update from Brett. He had a little bit of pushback on one of the properties that he reached out to, and he basically got some static. And what I suggested that he do is get on the call with the agent and get a deal done. And it turns out he was able to do that. And they were very nice. He built some rapport with her because of some commonality they had. And he had to remind her what an LOI is, a letter of intent. This is a residential agent who probably isn't familiar with seeing letters of intent, which is fine. And she said once she explained it, that's fine. She's okay with that he provide her an LOI just to see if we're in the right ballpark. All right, that is answering some questions. Now let's talk about building and strategizing in public. And I'll talk to you about some of these deals that I'm working on here. So I'm working on an RV park in Texas, and I've met with a capital partner who is interested, and he's still doing some evaluation, asking me some questions. I've been waiting on a closing cost, and this actually reminds me I need to follow up with the title agent to get the quote. And then I also met with a lender today and got some quotes on what the going rates are right now for RV parks. And they said they would do a 70% loan to value. So purchase price times 0.7 would be what the loan proceeds would be, assuming it appraised for it. And then the rate would be 8.5%, which is pretty high. Basically, they said prime plus 1. And then they would amortize that for a 25-year amortization schedule. And so I think this is hurting me because I was forecasting a little bit lower, more like a 7.5%. And so it's like a whole percent higher than what I expected. But I did get a higher LTV than what I was going for. So that might make up for it. And then the 25 years kind of expected. And the good news here is this is a 10-year balloon, meaning that the property loan would run for 10 years. They'd amortize it for 25. At the end of 10 years, I would have to either refi or recast the loan at the current market rates, but it'd be fixed for 10 years at 8.5. Okay, no new news here on this 8 unit in Louisiana. So nothing really to report today. But we do have a little bit more to talk about on this 50-unit RV that the sellers are being uncooperative. So we don't have the PSA. We've all agreed to the terms of the PSA, purchase and sale agreement, but they won't sign it until we give them a proof of funds. And we said, like, dude, we're raising capital. Like, we don't have 500 cash in our pocket waiting to buy your property. When we get under contract, we will get the due diligence documents we need from you. We want the P&L, profit, and we want the rent roll. And we don't even care about who is actually in there. Like, you can anonymize the rent roll. We just want to see how many units are actually filled, what kind of rent and expenses you've had for the last 12 months. The T12 is called the trailing 12. The P&L is the profit and loss. And these are your financial documents that let us know if what you're claiming the NOI is real. Because people will overstate the income and they'll understate the expenses. Because remember, NOI is basically it's revenue minus expenses. That's equal to your NOI on an annual basis. And so people will state that their income is higher. They'll ignore their vacancies and they will say that their expenses are lower. They'll basically not include expenses that they're actually paying to make their NOI look much bigger, which makes the value of the property seem more. And so when we get the property under contract, we go really hard on the financials to prove to us that what they're saying is real, and that oftentimes we find the NOI is nowhere close to being accurate. All right, so on the single family portfolio that I have in Little Rock, Arkansas, it's the portfolio that I built when I first got started in the business. I'm starting to sell off some of my single family, and I just got through selling a property, and I want to go through my when I sell a property checklist, which I haven't done. I haven't sold a ton of properties that I've owned for a long time, and so I have to kind of unravel everything. So I had to go back and revisit my checklist. And so I wanted to show you what I developed. So over here is the property checklist that I created. Let me zoom in a little bit for you. So it's not quite the eye chart. And so all the paperwork and records, there's a lot of documents in this business. And so I want a digital copy of that so that I can then send it to my bookkeeper and accountant. And I also want to file that away into my Google Drive so that if anything happens to my hard drive or anything or my email or whatever, I have a backup in the cloud. And then I also want to retain a physical copy. And so any deeds or releases or payoff letters or title insurance or any kind of physical documents, I want them to hand that to me. So when I go to a closing, they walk in and they hand me the closing documents, my copies, and then they have me sign the originals. And then they email me a copy of the digital copies to my email address. I take that physical copy, I write the address on top. So, like 123 Main Street. And then I file that away in my physical records at my house. And so I've rarely had to go back into those physical records, but it's nice to know that they're there. And so I also want to take care of these financial items. I want to make sure that I received my payout. I want to verify any sort of loan has been paid off. I want to pay any outstanding invoices. So sometimes I have contractors or photographers or cleaners that I may not have paid yet because we just got through having the work done. Any sort of financial records, update the depreciation schedules for your accountant. And then basically, if you're doing any sort of a 1031 exchange, you want to make sure and wrap everything up with any professional that would work with you on the finances. And then on the operational side, you want to tell your property manager that you sold the property. You want to make sure your insurance is canceled. I have actually paid for insurance on a property that I've owned, that I had sold and hadn't owned for a couple of months before I realized it. So that's bad. I stop any automatic payments. So you probably have your mortgage and utilities on auto pay, and you want to turn those off because I have made the mistake of not turning that off. And I've sent payments on a mortgage that I had just paid off, and I had to go back and kind of get a refund. So it's kind of a hassle. And so you want to make sure that the utilities are either transferred or turned off. This can be a real hassle sometimes, but man, it's just like you don't want to be paying for somebody else's gas and water or trash your internet for several months afterwards because it's a good chance you won't get it back. And then if there are tenants in place, you want to make sure that either you or the property management notifies them that there's been a change in ownership, and you want to give them the buyer's preferred contact method. So I asked the buyer, how do you want the tenants to reach out to you? And so they have that sign-off document that they have ready for them. So it's not a surprise to anybody because I want to walk away and be done. I don't want to get pulled back into anything else. And then any sort of internal tracking systems that you have, like your CRM, You want to update any kind of property trackers. You want to archive any photos. So I keep a record of all of the properties I've owned and all the pictures I've taken. But then I move that file into the sold column so that it's not taking out my active properties category. And so I'll link a copy of this in the description below so you can get this a copy for yourself and so you can use it for your own properties. All right, that addresses building and strategizing on the deals I have in public. And now let's go update some stats. All right, so today is 8/19, and let's check the YouTube main channel, long form, 328. So we got a little bit of growth. And then on this channel, the daily, just a little bit of growth as well. So no traction still on Instagram. I need to up my game over there. And let's check out the Skool community. And we're at 3253. So just in one day, there's been, 15 people added. So Skool is seeing a ton of growth. Hormozy just got through doing his launch, and so it's driven a lot of new people to Skool. And so people are starting to find the places that they're interested in the Skool community. So I'm sure some of this is just the natural growth of Skool. All right, that is the stats updated. So make sure and drop a comment or a question below inside of the YouTube commentary section. If you want access to our Skool group or any of the resources that I mentioned, that'll all be in the description below. I look forward to seeing you tomorrow.